Welcome to Simply Explained Academy. Today, we're diving into a topic that's crucial for anyone involved in the crypto space: crypto scams. Whether you're a seasoned investor or just starting out, the world of cryptocurrency is full of opportunities, but it's also riddled with risks. From Ponzi schemes to rug pulls and phishing attacks, scammers are getting more sophisticated every day. But don't worry, by the end of this video, you'll know exactly how to spot these scams and protect your hard-earned crypto. So, let's get started. First up, let's talk about Ponzi schemes. These scams have been around for decades, but they've found a new home in the crypto world. A Ponzi scheme promises high returns with little to no risk. Sounds too good to be true, right? Here's how it works. Early investors are paid with the money from new investors, creating the illusion of profitability. But eventually, the scheme collapses when there aren't enough new investors to keep it going. One of the most infamous crypto Ponzi schemes was BitConnect, which collapsed in 2018, causing investors to lose billions. All right, let's talk about how you can spot a Ponzi scheme in the crypto world. It's super important to stay alert. So here's what you need to look out for. First up, guaranteed returns. If someone's telling you that they can guarantee you big returns with no risk, you need to run the other way. Crypto is volatile. That means it goes up and down, and no one can promise you consistent profits. So, if it sounds too good to be true, it probably is. Next, lack of transparency. Real legitimate projects have clear white papers, roadmaps, and teams that you can actually verify. If the details are vague, or worse, if they're missing altogether, that's a huge red flag. And then there's pressure to recruit. Ponzi schemes rely on bringing in new people to keep the cycle going. So, if someone is pressuring you to recruit your friends or family into an investment, that's a big warning sign. Legitimate projects don't work that way. Now, how do you avoid falling for one of these? First, do your research. Look into the project, check out the team behind it, and make sure you understand the technology. If you can't find any solid information, it's time to walk away. Also, remember to be skeptical. If something sounds way too good to be true, it probably is. Trust your gut. And finally, diversify. Don't put all your money into one project. Spread out your investments to reduce your risk. It's the best way to protect yourself in this unpredictable market. So keep these tips in mind, and you'll be way better prepared to spot and avoid Ponzi schemes in crypto. Next, we have rug pulls, one of the most common scams in the decentralized finance space. A rug pull happens when developers create a seemingly legitimate project, attract investors, and then suddenly withdraw all the funds, leaving investors with worthless tokens. One of the most notorious rug pulls was Squid Game token, inspired by the popular Netflix series. The token's value skyrocketed, but the developers disappeared with millions, leaving investors holding the bag. All right, let's talk about how to spot a rug pull in the crypto world. First up, anonymous teams. If the developers are hiding behind anonymous profiles, or they have no verifiable track record, that should make you cautious. If you can't find out who's behind the project, that's a major red flag. Next, liquidity locks. Always check if the project's liquidity is locked. If it's not, that means the developers can just take all the funds whenever they want. Definitely something to watch out for. Then there's unrealistic promises. Be really careful with projects that promise huge returns in a very short time. If it sounds like a get-rich-quick scheme, it probably is. Finally, low market cap and high volume. If you see a token with a really low market cap but tons of trading volume, it could be a sign of market manipulation. Always dig deeper if you see this happening. Now, how do we avoid these rug pulls? First, stick to reputable projects. Invest in projects that have been around for a while and have a solid, proven track record. Next, check the liquidity. Make sure the project's liquidity is locked, and even better, that it's been audited by a trustworthy third party. And lastly, community trust. Join the project's community and see what people are saying. If there's a lot of skepticism or people raising concerns, it's probably best to steer clear. So, keep these tips in mind, and you'll be much safer when investing in crypto. Now let's talk about phishing attacks. These scams are designed to steal your private keys, passwords, or other sensitive information. Phishing attacks can happen through fake websites, emails, or even social media messages. For example, You might receive an email that looks like it's from a legitimate crypto exchange, asking you to verify your account. But when you click the link, you're taken to a fake website designed to steal your login credentials. All right, let's dive into how to spot a phishing attack. This is one you definitely want to be aware of to keep your crypto safe. First, suspicious links. Always double-check the URL before you click on any link. Scammers are sneaky. They'll create links that look like they belong to legitimate websites, but with just one letter off. So, always double-check the URL before you click. Next up, unsolicited emails. Be cautious if you get emails or messages out of nowhere asking for your personal information. Legitimate companies won't ask for this kind of sensitive info via email. Then, look out for poor grammar and spelling. A lot of phishing attempts are riddled with typos and awkward language. If you see something like this, it's a big red flag. And finally, too good to be true offers. If you see an offer that sounds too good to be true, it probably is. Scammers love to make offers that seem irresistible to get you to click on a link or share personal details. Now here's how you can avoid falling for one of these phishing scams. First, use two-factor authentication. Always enable two-factor authentication on your accounts. This adds an extra layer of security and makes it harder for scammers to gain access to your accounts, even if they have your password. Next up, bookmark legitimate sites. Bookmark the official websites of your crypto exchanges and wallets. This way, you're always going straight to the real site and not some fake one trying to steal your info. Then, verify contacts. If you receive a suspicious message, don't click any links. Instead, contact the company directly through their official channels and verify if they sent it. It's always better to double-check. And finally, use a hardware wallet. Store your crypto in a hardware wallet, which keeps it safe from online threats. It's one of the most secure ways to protect your assets. So, keep these tips in mind and you'll be way ahead of any phishing attempts trying to steal your crypto. Another common scam in the crypto world is fake ICOs and token sales. Scammers create a fake project, complete with a professional-looking website and white paper, and then promote it heavily to attract investors. Once they've raised enough funds, they disappear. One notable example is the Centra Tech ICO, which raised $32 million before it was exposed as a scam. The founders were later arrested and charged with fraud. Let's talk about how to spot a fake ICO. This is a common scam in the crypto world, so you definitely want to know the red flags. First, unrealistic promises. If a project is promising you crazy returns with no clear use case, it's likely a scam. No project should promise you huge returns without a solid reason behind it. Next, lack of a working product. Real projects usually have a working prototype or product that they can show off. If there's no evidence of a product, be very cautious. It's a huge warning sign. Then, anonymous teams. If the team behind the project is anonymous, or they don't have any verifiable experience, that's a massive red flag. A legitimate project will have a team you can look up and verify. And finally, be on the lookout for pressure to invest quickly. Scammers love to create a sense of urgency, trying to get you to invest before you have time to think. If they're pushing you to act fast, take a step back and think about it. Now, how do we avoid these fake ICOs? First, research the team. Look up the team members. Do they have the experience? Are they known in the crypto world? If they have no track record, that's a huge red flag. Next, check the white paper. A legitimate ICO will have a detailed white paper that lays out the technology, use case, and roadmap. If the white paper is vague or non-existent, be careful. Then, community feedback. Always check what the crypto community is saying. If there's a lot of skepticism or concern, it's probably best to stay away. And finally, regulatory compliance. Make sure the project is following the necessary regulations and has all the right licenses. Legitimate projects are compliant with relevant laws. So, keep these tips in mind, and you'll be able to spot and avoid fake ICOs in no time. Social media has become a breeding ground for crypto scams. Scammers often use fake celebrity endorsements, giveaways, and impersonation to trick people into sending them crypto. For example, you might see a tweet from a fake Elon Musk account promising to double your Bitcoin if you send it to a specific address. Or you might come across a fake giveaway that requires you to send crypto to participate. So let's talk about how to spot social media scams. First up, fake accounts. Scammers often create fake accounts that look like they belong to celebrities or influencers. They'll use similar usernames or photos to try and fool you. Always verify the account's authenticity before you trust anything they say or offer. Next, giveaway scams. If you see a giveaway that asks you to send crypto to participate, that's a scam. Legitimate giveaways don't require you to send anything to get started. So if they're asking for crypto upfront, steer clear. Then, impersonation. Be cautious of accounts that are impersonating well-known companies or individuals. Scammers will try to look like a trusted brand to trick you into giving them your crypto or personal info. And always remember, if it seems too good to be true, it probably is. Scammers thrive on making offers that sound irresistible, but if something feels off, don't trust it. Now, how do we avoid falling for these scams? First, verify accounts. Always double-check the authenticity of any account you engage with. Look for verified badges or do a quick search to make sure it's the real deal. Next up, don't send crypto. Never ever send crypto to participate in a giveaway or to receive a promised return. Then, report scams. If you spot a scam, don't just ignore it. Report it to the platform and let others know, so they don't fall for it too. And finally, stay informed. Scammers are always coming up with new tactics, so make sure you keep up with the latest scam trends and educate yourself on how to spot them. Stay sharp, and you'll be much safer from social media scams. Finally, we have exit scams. These happen when a seemingly legitimate project suddenly shuts down and the team disappears with investors' funds. This often occurs after a project has raised a significant amount of money through an ICO or token sale. One of the most infamous exit scams was OneCoin, which defrauded investors of over $4 billion before the founder was arrested. All right, let's dive into how to spot an exit scam. First, lack of communication. If the team suddenly goes quiet or stops giving updates, that's a major red flag. A legitimate project will keep you in the loop and keep communicating. Next, delayed product launches. If the project keeps pushing back its product launch with no solid reason, it could be a sign that they're stalling before pulling the rug on you. Then, unrealistic promises. If they're promising massive returns with no clear use case or substance behind their project, it's probably too good to be true. Be cautious. And finally, lack of transparency. If the team is being secretive about their progress, finances, or anything else, that's another red flag. Transparency is key in any legitimate project. Now, how do we avoid these kinds of scams? First, research the team. Look up who's behind the project. Do they have the experience? Are they credible? A strong team with a proven track record is a good sign. Next, check the roadmap. A legitimate project will have a clear roadmap with achievable milestones. If they don't have one or it's vague, be careful. Then, community feedback. Always check what the crypto community is saying. If there's a lot of skepticism or negative feedback, that's a huge red flag. And finally, regulatory compliance. Make sure the project is following relevant regulations and has the necessary licenses. Legitimate projects take compliance seriously. So, keep these tips in mind to avoid falling victim to an exit scam. Stay alert and do your research before investing. And there you have it. The biggest crypto scams and how to avoid them. The crypto space is full of opportunities, but it's also full of risks. By staying informed and vigilant, you can protect yourself from these scams and make smarter investment decisions. If you found this video helpful, please like, share, and subscribe. And if you want to learn even more about crypto, watch this video.